Navigating the choppy waters, Indian stock market update. The Indian stock market is currently experiencing a period of heightened volatility as we enter the final quarter of 2024. This is a reflection of both domestic and global uncertainties that are keeping investors on edge. The benchmark indices, like the Sensex and Nifty, have witnessed significant fluctuations in recent trading sessions. This rollercoaster ride can be attributed to a confluence of factors, both internal and external, that are shaping investor sentiment. One of the primary reasons for this volatility is the uncertainty surrounding global economic growth. The ongoing war in Ukraine, coupled with persistent inflationary pressures in major economies, has cast a shadow on the global economic outlook. These concerns have been weighing on investor sentiment globally, leading to a flight to safety and increased risk aversion. As a result, emerging markets like India have experienced outflows of foreign capital, further contributing to market volatility. Despite these challenges, the Indian economy remains resilient, with strong fundamentals that underpin long-term growth. The government's focus on infrastructure development, coupled with robust domestic consumption, is expected to drive economic expansion in the coming years. Furthermore, the Reserve Bank of India, or RBI, has taken proactive measures to control inflation and maintain financial stability. These factors provide a degree of comfort to investors, even amidst the current volatility. It is crucial for investors to maintain a long-term perspective and not be swayed by short-term market fluctuations. While the current environment may seem daunting, it is important to remember that market corrections are a natural part of the economic cycle. By focusing on quality companies with strong fundamentals, investors can navigate these turbulent times and position their portfolios for sustainable growth in the years to come. Sectoral shifts and the quest for growth. Amidst the broader market volatility, we are witnessing interesting sectoral shifts within the Indian stock market. Some sectors, like information technology and pharmaceuticals, have faced headwinds due to global factors such as slowing demand and pricing pressures. On the other hand, sectors like infrastructure, manufacturing, and green energy have emerged as bright spots, buoyed by government policies and favorable tailwinds. The infrastructure sector, in particular, has been a major beneficiary of the government's push towards capital expenditure. With ambitious plans to upgrade the country's roads, railways, airports, and other critical infrastructure, this sector is poised for significant growth in the coming years. This has led to increased investor interest in companies operating in this space. Another sector witnessing renewed interest is manufacturing, driven by the government's Make in India initiative. This program aims to transform India into a global manufacturing hub by attracting foreign investment and promoting domestic production. As companies seek to diversify their supply chains and reduce their reliance on China, India stands to benefit from this trend. The green energy sector is another area of immense potential. With India setting ambitious targets for renewable energy generation, there is a massive opportunity for companies involved in solar, wind, and other forms of clean energy. This sector is attracting significant investment, both domestic and foreign, and is expected to be a key driver of India's economic growth in the years to come. These sectoral shifts present both opportunities and challenges for investors. While it is important to be mindful of the risks associated with specific sectors, identifying and investing in companies that are well positioned to benefit from these emerging trends can generate significant returns in the long run. The cautious return of foreign institutional investors. Foreign institutional investors, or FIIs, have been treading carefully in the Indian stock market, given the global economic uncertainties and domestic challenges. However, there are signs that their cautious stance might be slowly changing. The Indian market's strong fundamentals and growth potential continue to attract interest from these investors. Recently, there has been a gradual return of foreign capital, especially in sectors that are expected to benefit from long-term growth trends. This cautious return signals a vote of confidence in the Indian economy's resilience and its ability to weather short-term disruptions. While the pace of FII inflows may not be as robust as in previous years, their re-entry into the market is a positive development. For investors, this trend underscores the importance of staying informed and being prepared to adapt to changing market conditions. By keeping an eye on the movements of foreign institutional investors and understanding the factors driving their decisions, investors can better position themselves to capitalize on emerging opportunities in the Indian stock market. As we navigate through the complexities of the Indian stock market, it's crucial to understand how global headwinds can influence our financial landscape. You see, factors such as geopolitical tensions, trade policies, and international economic trends can significantly impact market performance. For instance, a trade war between major economies can lead to volatility in stock prices. Similarly, changes in global oil prices can affect various sectors, from transportation to manufacturing. By staying informed about these global developments, investors can better anticipate potential market shifts and make more informed decisions. Now, let's talk about some strategies for success in the Indian stock market. Firstly, diversification is key. By spreading investments across different sectors and asset classes, you can mitigate risks and enhance potential returns. Secondly, it's important to stay updated with market news and trends. Regularly reviewing financial reports and staying informed about company performance can help you make timely investment decisions. Thirdly, consider the long-term perspective. While short-term market fluctuations are inevitable, a long-term investment approach can yield substantial returns over time. And finally, don't hesitate to seek professional advice. Financial advisors can provide valuable insights and help tailor investment strategies to your specific goals and risk tolerance.